Hello dear traders and investors, I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is January 9 and we're starting from Euro-Dollar pair with Jakub Novak. Long positions buy Euro when the quote hits 1.0962 and take profit at the price of 1.0988. Growth will occur in continuation of yesterday's upward trend, but breaking out of the sideways channel may be quite difficult. When buying, make sure that the MACD line lies above zero or rises from it. Euro can also be bought after two consecutive price tests of 1.0944. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0962 and 1.0989. For short positions, sell Euro when the quote reaches 1.0944. and take profit at the price of 1.0916. Pressure will return in case of weak data and no bullish activity around the daily high, as well as another batch of weak data from Germany. When selling, make sure that the MACD line lies below zero or starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0962, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0944 and 1.0916. Let's draw the pivot points with Evangelos Paulakis. It's GBPUSD currency pair. The pound does not abandon hopes of updating the December high, 1.2826, and continuing to rise. The next bullish target in this case will be lower boundary on the monthly cloud, 1.2893. The main attraction, which currently restrains the development of the situation, is provided by the daily short-term trend. It's a red line on graphic, 1.2717. And the final level of the weekly Ichimoku cross, 1.2708. To change the situation, bears need to eliminate the daily Ichimoku cross, 1.2624, and overcome the cluster of supports around 1.2581, 2597, monthly short-term trend plus weekly levels. On the lower timeframes, the advantage of bullish players who are trying to develop the rise is now preserved. Targets for the rise within the day-to-day are located at 1.2783, 2821, and 1.2877, resistances of classic pivot points. The key levels at the moment serve as supports, and in the event of a corrective decline, the pair will be first to meet at the levels of 1.2727, central pivot point, plus weekly long-term trend, 1.2683. Further supports within the day, today can also be provided by support 2, 1.2633, and 1.2595, support 3. Arif Makmar has the trading plan for USDCAD. Let's have a look. With the equal high at the level of 1.3401 on the 4-hour chart, the commodity currency pair of USDCAD, which is a sign of significant liquidity at that level, with confirmation of stochastic oscillator at the oversold level, in the near future USDCAD has the potential to strengthen it up to test level of 1.3425. But as long as the reinforcement does not exceed the level of 1.3450, USDCAD has the potential to weaken back to the level of 1.3286 as the main target. And if the volatility and momentum are strong enough, the next level of 1.3177 will be the next target to be addressed, where this has been confirmed by the emergence of deviations in the loonie with indicator stochastic oscillator. And finally, here's Larry Bailey with AUDUSD currency pair forecast. Yesterday, the Australian dollar pierced through the support level of 0.6693, the peak on December 4, once again, and it started to rise, continuing this trend into today's Asian session. In addition, we can see that the Marlin oscillator signal line has turned upwards from the lower bound of its own channel. It's highly likely that the price is starting an uptrend in the medium term. We can confirm this with the Marlin movement into the positive territory, and the price holding above the nearest resistance at 0.6775. Further, it's probable that the price will rise towards the designated target levels on the chart 0.6820, 6874, and 6897. On the 4-hour chart, Marlin is optimistically developing an uptrend. Such an oscillator signal is crucial for the price right now because it's still below the balance and the MACD lines. To decisively drive the Australian dollar into a medium-term uptrend, it must surpass the MACD line, which would correspond to the price approaching the level of 0.6820. The growth will probably not progress smoothly, with retracements from various levels. That's all for today. See you online soon, and good luck.